All right, guys. So the highlight today is it's a slow, busy, or a slow, tight range, low volume day. We know that going in. So you lower your expectations, right? And when it's busy and volatile and the volume is higher, you got to cut your size because your risk is automatically going to go up. So in a slower day, you get a lot of rotation or what we call chop. And if you have a higher than average amount of trade, you probably got nothing to show for it on a day like today. You got to be patient to pick your spots. So guys said he had 08s as a really big level for him. And we were below 08. And I said, a lot of times with that level or a level that you like for the reasons he liked it is a magnet. And you can play it from the long side up to it. But if you're going to use it as resistance, be patient. Don't try in a day like today, don't try to say it's close enough. That might be on a busy day if it gets up here. Oh, that's close enough, 7 even. And then you get shook out when it goes to 8 and you're not on the team when it goes down. On a busier day, close enough would work a little bit better. But on a slower day, you have to be patient. Sure enough, into 8 even, 2 things happened. We had a bunch of shorts that puked, which means if you want to get short, you don't want other shorts competing with you. What do we say 1,000 times? If there's many shorts, there are many buyers, and more buyers, the price of anything is going to struggle to go down. So you want to shake out shorts. That's what this red bar is indicative of. And it came up over here, it came up over here for 6 minutes, and then it transfers to the 8-hour vertical. But that happens real quick, and then a big buyer right into 8 happens. So you take a shot, you know where your risk is, and you know what your timing is. And it's not just because it worked, it's because it's this whole ready, aim, fire. So one of the things that I try to explain to everyone, listen, you don't have to come to a place to educate yourself and have some skill or talent that you haven't been able to utilize. And they're going to teach you the best opinion and the best way to confirm that opinion and the best way to read economic numbers and the macro picture and the micro picture and a profile picture and a chart pattern and all this other stuff. And if they're weak at the fire in ready, aim, fire, you could have the best ready and the best aim in the world. It ain't going to matter. I want people to bring the levels that they have, the strategies that they have, the opinions that they're, the things that they use to create their opinions. You bring that to a place that allows you to qualify and disqualify those levels, those magnets. Then you might add a way to confirm it a little bit better with a pattern or not. But it's not a better level that's going to make you a better trader. It's a better qualifier or disqualifier that's going to make you a better trader. What it does is it gives you the timing aspect of, wait a second, I've got a good qualifier and it's not working. Now, all of a sudden, you can get out of a trade sooner rather than later. And it has nothing to do with the price or where you're going to put your stop. You know what? If it doesn't work in a timely fashion, it probably isn't going to work. And what's a timely fashion? 1 minute and 10 seconds? Obviously, that's different based on the speed of the market. That's the easier part to get a feel for. The harder part most people never find is the qualifier, the fire in ready, aim, fire. And this is so opposite of what most people are used to. When you see buying, sell it. When you see selling, buy it. Shorts puke, longs puke. I'm telling you, everybody that comes to me because they never heard this explained this way by anybody else. And yet it's the simplistic governing principle of what moves price. So if you're trying to predict price, you better know like the back of your hand what governs it.